So you've probably seen some videos saying that now is the best time to invest in the stock market due to it being a big opportunity with a potential recession on the horizon. And not only that, the stock market in general has had one of the worst starts to a year in I think over 30 years. Which seen the S&P 500 drop as low as 23% from its opening price in January. But over the last week or so here, we've seen a bit of a rally, mainly due to inflation fears starting to come down a small bit. We're not out of the woods yet, but the latest CPI came in at 0% inflation, which means there's been no change in the last month. So people are starting to feel a little bit more optimistic about the stock market. And of course with that, there's a lot of new investors that come into the stock market around this time when there are opportunities like this. So I thought it'd be a great time to go over my top 3 tips for investors, not only beginner investors, because it's always good to remind even seasoned investors of these 3 bits of advice. So if that sounds good, please take a second to drop a like on this video. It really does help out the channel, and please consider subscribing if you enjoy what you see. So number 1, and this is one of the ones that I find the most prevalent, is be patient. Do not try to get rich quick. Even when I post my portfolio updates and show the gains that I've made on the stock market portfolio, people are wondering how to get involved and how quickly they can make this kind of money too. But what often happens in this situation is people will start to get into investing. They'll invest a couple of hundred, maybe a couple of thousand, and then they'll see that after a month or two, they haven't made these gains that other people are making. And often they can just cut their losses and take their money out with a small loss and then just never go back to investing again. Whereas if they just stayed invested, let time go to work, let your money go to work for you, and then over time, with patience, your portfolio will grow. Now, of course, that depends on what stocks you're invested in, but even if you go for something as simple as the S&P 500, which historically has gained about 10% every year, time is the most important thing. And as I mentioned at the start of this video, the S&P 500, which is probably one of the safest investing options when it comes to the stock market, was down nearly 23% this year already. As I said, we had a bit of a rebound since then, but it just goes to show you it's not all sunshine and roses. You need to have patience on your side. The reason we say the S&P 500 returns an average of 10% per year because that's what it roughly works out as, but there's years where it might be down 10%, up 30%, it all averages out, and you roughly come out with 10% gain each year. So the real key here is don't just invest your money with the expect to see big returns in 1 to 2 to even 3 months time. Of course it can happen for people, but realistically it mightn't happen for you. So set yourself a bit of a longer term goal, at least 3 to 5 years, and watch your money work for you and bring in them returns. So stay patient guys, it really is all about the process, not about getting rich very, very quickly. Next up then, I often get the question of where do you research your financial news, where do you research stocks, how do you know which ones to buy, etc. So for me, I use a lot of different sources. YouTube here is a great one, for example. I watch a lot of other YouTubers, just seeing what's kind of hot right now in the market, what people are talking about. And I make a point of not just watching one YouTuber, I like to get a couple of different point of views because one person could be biased and that's nothing against them. They may own a large portion of the stock or they may just have different opinions and views, where it's good to get different sides of the arguments and then use that towards your own thinking. I also like to use Twitter, seeing what people are saying over there, engaging in discussions, keeping eyes on topics such as if you just search any stock ticker on Twitter, you'll see discussions, see what average people are saying, see what analysts are saying. And I also like to use other services such as Seeking Alpha, who have kindly sponsored this video. Essentially what they are is a daily newsletter sending you out financial news straight to your inbox every day. They also have other services where you can read articles from authors on certain stocks, get their opinions on where they think the stock is going. It's free to sign up over there and get the newsletter, and if you want to get that little bit extra, you can take a look at the premium, which they currently have a free trial for, and that's where you can screen through some of the top stocks right now. You can even listen to earnings and conference call recordings of companies on their website, and you can get access to their premium news and articles as well. So it's free to sign up over there. Feel free to try out the premium trial as well and let me know your thoughts on it. It's nice that you don't have to go searching for this information and that you can have it all consolidated on one platform, as well as getting them newsletters straight to your email as well, so you can keep an eye on what's going on in the market. They've also given me a discount code, which I'll leave linked down in the description below if any of you guys want to go check that out. And just to conclude on that point, I think it's really important to follow some of them steps in terms of the YouTube, Twitter, and some of the services like Seeking Alpha there, just to be able to get an idea of where the market is currently at. And it can give you some peace of mind when you're wondering what is going on in the stock market when you see these big drops occurring every day. A lot of these services offer insights into why these things are happening. And it may even alert you to opportunities that are rising in the stock market, like a potential recession, where you could possibly buy more on the dip and end up doing well in the future. And now moving on to our third and final point for today. Of course, there's loads of tips, but these are just kind of my top 3 ones. And the third one is dollar cost average. Now this is something that I've mentioned a good few times on the channel, but it's always a good one to remind people of. Especially in times like this where the markets tend to be dropping, people often get deterred by that and just don't want to invest anymore. They're just not comfortable knowing where the stock market is going to go. Is it going to break lower or will it recover? And people often wait on the sideline and stop dollar cost averaging until they get an idea. But often they can miss big rallies, or often they can miss opportunities to get into stocks at lower points. So it's a real mental challenge, I know, but it's something that you just need to have discipline on and just continue to do your normal amount every single month, every single week, whatever you decide to do. You'll buy stocks when they're lower, you'll buy stocks when they're higher, but overall the idea of dollar cost averaging is that you're always buying into the market, you're giving your money the chance to grow, and while you do buy high and you do buy low, overall it'll work out at a pretty good average price. And it can be tempting to try time the market and say, I normally put 100 in every week, but I'm just going to wait on the sidelines because I think a drop is coming. But often the drop never comes and things just go to the moon. So it's really hard to time the market. So dollar cost averaging is often the best strategy. Now, if you're feeling really pessimistic about the market and are really certain in your head that you think it's going lower, what you can do as a variation is continue to dollar cost average, but just invest a little bit less and keep the rest on the sidelines just to be able to deploy that capital if you do think a drop is coming. Now, of course, it's a bit of a risky strategy. You're never sure if a drop will come, but if it does, at least you'll be able to take advantage of it there, but all the time still continuing to dollar cost average into the market. But anyway guys, those are my top 3 tips for stock market investors. As I said, there's loads of tips, but these are 3 that I think are really important. And not only for beginner investors, but it's also good for seasoned investors to be reminded of these from time to time. If there's any other tips you guys have, I'd love to see them in the comment section below. As I mentioned, if you enjoyed the video and can take a second to drop a like on it, really does help out the channel. And I'll catch you guys in another video.